Good afternoon. Welcome to the Forex Pro Charts weekly trade results for the week of April the 10th, 2011. This week we're going to take a look at four currency pairs. Okay, first we're looking at the Euro USD, and this is the 60-minute chart. So taking a look here, we see that we have the zone beginning at 1.4455 with the 60-minute armpit at 1.4530. And we also have the extended trend wall coming through. So price came up into the zone, bounced off again, never exactly reached the zone. So some of you may not have ever entered this trade. Some of you that use a cushion, a 10 pip cushion, as some of you do, would have entered your trade probably right here. And if you indeed entered your trade right here, you would have had a bounce of 83 pips. So you should have at least had the first portion of your trade close out at the 20 pips. And then on the second portion of your trade, whether you take that limit at 50 pips or whether you take it down to the daily armpit, either way, you should have been able to close out that second portion of your trade as well. Then, depending on how you manage the third portion of your trade, you came up here. If you went to an exact break even, you would have stopped out. However, if you did not, if you still had a little bit of a cushion right at or above the 60-minute armpit, then you may have been able to go on and get more pips, even going down here below 1.4400. This was down to about 143.70 right here. So that would have been, would have been quite a bit more that you could have had here on your third portion of your trade. And many of you on that third portion would have been moving stops down to this this trend wall here when you saw price move past that, so that then here you would have stopped out, but with a very nice gain then on the third portion of your trade as well. Would have been over 100 pips. So so this worked into a very nice trade if you do have a cushion on your trade, and that all depends on exactly how you like to set up your trade, what your risk tolerance is, and just how you've demoed and what feels the most comfortable for you. Some of our traders use a cushion, others don't like to add in that extra risk and prefer to just wait for the actual armpit to be reached. So that was the first currency for the week, the EU. Let's take a look at another. Okay, this is the 60-minute chart for the GBP USD, and we see here that price moved up into the zone beginning at 1.6315, moved up to the 60-minute armpit, actually moved through it and bounced off these two parallel trend walls here instead of bouncing exactly off the 60-minute armpit. So bounced off those trend walls, came down, then came right back up to the 60-minute armpit, and then we just see that it bounced several times before moving down back to this monthly armpit as indicated by the black dotted line, where it consolidated for a little while before moving back up again. If we take a look here, when price moved up to the 60-minute armpit and then moved down here, this would have been a gain of 32 pips. So if you had placed your entry, you would have at least gotten your 20 pips. And then again, as always, depending on exactly how you manage your trade, if you had moved your stop already to break even, then you would have stopped out here with the gain of 20 pips. If you left a little bit of a cushion in, then you could have, on your second portion of your trade, you would have seen price move down to 63.15 eventually, and gotten that. And then at this point, price would have moved back up through the 60-minute armpit and should have stopped most of you out, unless you leave a third portion of your trade with the stop back up at the original portion. Some of our traders do that on just a very small portion of their lot, minimizing their risk, and then you would have seen price go all the way down here. But most of our traders will have stopped out here with a gain of 30 pips, 30 pips on that first bounce, and a maximum of 161 pips. So that was on the GBP USD. Okay, now looking at the New Zealand USD, again the 60-minute time chart. And we had at the end of last week, we had price bounce here and saw a small gain there. Then price came up, moved up to the zone beginning at 0.7879 and to the 60-minute armpit at 0.7935. So again, depending on how you manage your trades, if you use a cushion, you would have gotten in here. And price moved for 65 pips. If you wait for the actual armpit, you would have gotten in here, and price moved for 61 pips. So basically the same bounce either way you got in. Then price would have moved up and should have stopped everyone out before moving up here, up through the zone at the end of the week. So both of these zones are going to be dead this coming week. But we did see a nice bounce on the New Zealand USD, and again, most traders will have gotten two portions of their trade. The first one for the 20 pips, the second one for about 50 pips. Whether you do 50 pips or the daily armpit, would have done the second portion of your trade, and then your third portion of your trade would have stopped out. We had one more trade. Let's take a look at it. Okay, this is the Euro GBP. And this was a very nice trade. You see price came up, bounced off the daily armpit, down, then came back up, consolidated around the monthly armpit here before hitting the 60-minute armpit at 89.20, where price then bounced all the way down for 113 pips. And actually, some traders may still have a portion of their trade open because price has not moved up to stop out. So depending on how you manage your trade, some traders will still have a portion of this trade open. But traders should have been able to see, obviously that first 20 pips, and for the second portion of your trade, depending on where you take that. But if you take it at the daily armpit, you would have seen that, and then price went all the way back down to this dead zone before bouncing off the 5-minute armpit there a couple of times. So this was a very nice trade this week, and I hope you were all able to take advantage of that. With the Euro GBP, as you know, we tend to exercise caution because the pip value is higher than the other currency pairs, which makes the cost of a poor trade higher, but also makes the profit on a good trade higher as well. So all in all, we had 4 potential trades this week. All of them were successful, and we hope that you caught at least 1 or 2 of them, if not all of them. For more information or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com. You can get a week-long demo to our full analysis and charting services on 10 major currency pairs. And if not, we hope to see you back next week. Have a good week.